Hi, I'm Steve Beeman, co-founder and chief executive officer of Elevair Technologies. Thanks for spending another minute with me as I look to you on reasons to invest in Elevair. As an investor myself, there are always basic things I look for, and I'm sure you share some of these thoughts. So I wanted to cover them today looking at three things: the return potential of Elevair, the risk of Elevair, and then the exit strategies of Elevair. In the return side, let's look at a couple things. First, according to McKinsey, the addition of the metaverse into the global economy will result in about a $3 trillion increase in the economy. Now, if we go to Citi, who put out a similar report, they're looking at more like 14 trillion. So these are huge numbers. We're looking at a revolution to the global internet space that is akin to the initial, let's call it the Web 2.0 delivery. When people got their first websites, this will be every bit as big. And again, what Elevair has done is linked Web3 metaverse technology to advanced artificial intelligence, to digital networking, to video conferencing, and all set up for virtual commerce. So we are positioned to achieve success in this rapidly growing global market. And to that point, in the US alone, and that is our starting point, we are globally capable, but we'll start selling in the local low-hanging fruit. There are 33 million independent US businesses served by roughly 3 million associations. Our marketing program is going directly to the associations to get them to adopt our platform, and then we'll sell downstream into those members. By doing that, we lock in the Eleverse as a business-to-business platform. It becomes very sticky. And once people are in it, they're not going to want to move. They're not going to want to utilize Zoom, Mesh, or anything else because they're in the Eleverse, again, aligned with all of these other companies. Now, with that scalable marketplace that we have, our technology has been built to accommodate a distributed platform. In other words, each company in the Eleverse gets its own metaverse. We're not looking like Mesh did or like Meta did at one global universe land or central land. We're looking at 33 million potentially separate individual metaverses for those businesses and their employees. Then we wrap it together in a linkage so that there's embedded population. There's a reason for people to exist in the ecosystem, and we can then add virtual commerce to that platform. So this, we think, brings form and function to the metaverse space, which has been sorely lacking in the past. I was on an airplane with a guy 6 months ago, and I was flying down to Dallas, and he owned a company in California, and I was explaining what I was trying to do, and he said, can you enhance or replace my salesman? And I said, we are exactly trying to do that by adding the capability to automate digital selling, digital marketing, digital networking, and communication. And to that, he responded, that will change the world. And we think that's what we've got. So we have in the return side a vast market, a very targeted marketing program to get us into that market, a built technology that can be turned on a dime to go into it, and form and function coming to the business market. We think that's a huge reason for the return. Will Elevair get 1% of that market? That would be what? 300,000 companies. Will it get 10% or 3 million? Well, you can do the math on any of those metrics. We make so much money we can't count it. So the market itself is huge. Our technology is adopted into it. Our profit model works within it. So on the return side, to look at this as a 10-bagger or more is very realistic. But let's look for a minute on the other side, the risk, the downside loss. There are some things here that limit risk as investors look to the Eleverse. Number one, we already have 6 signed letters of intent for associations looking to adopt Elevair as their B2B platform. Those include Heiss, NFIB, Legendary, Universal Medical, First Coast Manufacturing. We even have a letter of intent from U.S. Alliance Credit Union, which is the nation's largest credit union. They're looking at us doing some platform work for them, but they know this is the future. And so we've got those ready to turn on. All we need to do is complete this first tranche in our offering. Secondly, the base platform to turn all these on is built. It's already there. All we need to do is take it out of the development computers into the production system. And we're ready to do that the moment we complete this first tranche. Third, the first tranche that I keep talking about is a $250,000, 25,000 shares at 10. When that's done, we turn on distribution, we turn on these customers, and we go off to the races. Now, with respect to that, people have said to me, well, what if you don't raise 250? What if you only get 100? Well, we are under agreement that first 250 goes into escrow until we achieve the $250,000 mark. So if we don't raise that money, all of it's just returned to the investors. If we get the 250, we have a low burn rate and we have low capital needs. So we'll be able to sustain operations for a few months to get into channel and get this thing going, during which time we'll begin the second tranche, that 75,000 shares that I've talked about. But I'm hoping, and I've talked to the board about it and to our brokers, I'm hoping and / expecting that the price on the stock will rise as we go into that second round. Now, the third thing that's important is the exit strategy. How do you and I get our money back? There are 3 ways we can do it, all of which are very legit. Number one, we can IPO the company. We are setting this up for a Reg A offering and an IPO type situation, no question about it. Number 2, we can sell the company. This is IP that's growing by the day for us. So we have a lot of intellectual property that puts value to the company. We are a Zoom killer. We are a complement to LinkedIn. We're a complement to GoDaddy. There are a host of companies that will be interested in the kind of work we're doing as we validate this and grow. And then finally, if we can't sell it, and let's say we do IPO it, we'll just keep it as a cash cow. The metrics are strong enough and the cash that we think will be generated, the free cash flow is strong enough that we should be able to pay dividends to our investors. So we've got 3 good exits on how to get your money back. We have very good ideas on how to limit the risk of this, and we have an enormously strong upside. So as you're looking at this for your portfolio, whether you're looking at 5,000 shares, 10,000 shares, or the whole 25,000 share lot, think about it on those terms. Can you make a lot of money? The answer is absolutely yes. Is it somewhat risk conditioned? The answer is yes. And can you get your money back? And the answer is yes. So I hope that's helpful for discussion. I look forward to speaking with you again. Send me an email to steve@elevaretech.io, steve@elevaretech.io, and I'll set up a time to speak with you directly, or visit www.investinelevator.com and make your investment today to suit your needs. But I thank you much for your time, and I look forward to a dialogue with you in the future.